My name is Teresa Timms. I'm president of TDR Mortgage and Real Estate Group in downtown Upland, and I'm always looking for creative solutions to finance puzzles, because that's what lending is in a lot of cases. It's a puzzle, and I'm a solver. I'm here with Heather Fox at HomeXpress Lending. She's what's called a wholesale rep, and she's someone that assists me in loan origination. So Heather, tell us a little bit about what you do and who you work for.
Absolutely. So like you said, I'm an account executive and I deal with brokers on the wholesale side. We are a non-QM company. We specialize in people who have credit events, self-employed borrowers, investors, which leads me to our DSCR program that you wanted to talk about today, right?
So Heather, most people don't know what a non-QM loan is. Is that like one of those crazy subprime loans like back in the day, or how would you explain a non-QM loan?
Well, there's a lot more skin in the game versus back in the day. We don't do 80-20s, 100%. There's a lot more regulations today than there was back prior to 2007. But it is geared for people who maybe can't qualify on tax returns or going full doc. We do have options that are bank statements, and it's just basically a non-QM loan is a non-qualified mortgage. Non-qualified means that you don't qualify through Fannie, Freddie, FHA.
The traditional mortgage channel.
Traditional mortgage channel like VA. So
I'm doing a loan right now, and hopefully I'll be closing it in a week or two. And I call it a DSR, but it's a DSCR. Did I say that right?
Yes,
DSCR. And basically, it's this super cool loan. I didn't have to put anything on the loan application about my borrower's job because he doesn't really have one. Well, he does, but he doesn't make money traditionally. Like a lot of people don't make money traditionally. So this loan is a loan where it's the property that's the star. The property is the qualifying factor. Can you tell us a little bit about how it works, what the loan application looks like?
Absolutely. Yeah.
Okay.
So this is for experienced investors. We also have programs for people who are first-time investors, and we go off of the lease agreements. So for refinance, we're going to go off of the lease agreement. We're going to give them 100% of the lease agreement. And how we come up with the DSCR is we take the lease agreement amount, 100% of it.
Okay, let's say the lease agreement is $2,000. Okay, it's $2,000.
$2,000, and then we divide it by the PITI.
So let's say on this particular one, the total taxes are like the principal, interest, tax, and insurance, PITI, is $1,700. That's the total, that's the refinance amount. And let's just say this borrower's doing a cash out refinance up to 75% loan to value, and it's $1,700. Does that automatically qualify someone?
So if you have $1,700 in a PITI and it's $2,000, your debt service coverage ratio is over. So you absolutely qualify. You have an over 1-to-1 ratio.
Okay.
Now, when you have a loan and you have someone that is less than, meaning that their rents don't cover their principal and interest, tax, and insurance, then you're going to have a lower DSCR.
So so the payment is $2,100. So if the payment's $2,100, but the lease agreement is $2,000, that's a deficit of $100. How would you do that?
You would just divide it. And so what you do, so let's just do it so they can see. So for example, if you have your lease is $2,000. Okay. And then you're going to divide it by 2,100.
Okay. I'm not very good at math. I know I'm in finance, but. Hey, isn't Heather cute, you guys? Don't you think she's so cute?
Oh my God. So we have a 95% DSCR.
Okay.
And we have different hits for that. So as the DSCR goes down, you're going to get hit to the rate, and it's going to have restrictions on your LTV as far as what you guys can lend.
Okay, that makes sense.
Yeah.
So I actually didn't know that. I thought it had to be under the lease agreement. I didn't know that you could actually go over a little bit. Meaning if the lease was $2,000, but the payment was $2,100, you could still do this loan.
Oh,
and so, does this loan require? It's just such a weird loan, right? Because you don't put any income on the loan application, and you don't provide any income or any income documents, like no taxes, no job, no pay stub.
Well, we do put, so you have to fill out, you have to fill out your 1003, and you do have to put some sort of position, whether they're an owner of something you do, but you just don't put what they actually make. You don't put anything about income on there.
Okay.
And then obviously you put the subject and where they're living, so that we know that it's an investment property, right? Just the standard stuff, but we want a clear picture of their schedule of real estate.
Okay.
That's it, really. I mean, it's so simple. It's a non-trade loan, so you don't have
Can they have like 50 properties, or like how does it work if they have a bunch of properties? Well, obviously you're gonna do the schedule of real estate.
We are, but we're gonna do the DSCR based off of the subject property.
So
we're not looking at their other rentals.
So let's say I have an investor that has 20 properties. He doesn't have to provide mortgage statements and lease agreements on all of his schedule of real estate?
So he does. We do require them to have lease agreements on all of their other real estate, but we're only doing the DSCR off of the subject.
See, one thing that I noticed in this new non-QM land, whereas before we may not have had to go to the extent of all that documentation, but you're still providing some meat. I mean, you're still having to go in and provide documentation. But like most traditional loans, you don't have to show income documents. And so you can get can you get 90% cash out?
No, absolutely not. The max that we do is 80% on a purchase, rate and term, and then for cash out, the max that you can do is 75%.
So I didn't know you could do this on, and this is only for non-owner,
This
right?
is only for non-owner.
Only for non-owner. So you could do a non-owner purchase to 80% if the property cash flows, basically.
Yes, you're absolutely correct.
I didn't know you could do a purchase.
You can do a purchase. So let me tell you, on a purchase, obviously there's not going to be a renter in there at the time. So we're going to go off of a 1004D, which is a rent survey from the appraiser, and we're going to take 100% of whatever the appraiser states on the.
Do you want to get in? Did you want 2 cents to the peanut gallery?
Oh, you guys are recording.
We're doing a live. Say hi, Alex.
Hi. How you doing?
Alex Diaz, president of Statewide Bancorp, or Statewide Funding? Statewide Funding, Bancorp.
We switched everything.
He's got the DBAs down.
Yeah.
Okay, so I really didn't know that you could do a purchase.
Absolutely.
So one of the things that I found is that the lenders are ultra worried about reverse fraud. So tell me about that, because I feel like the loan that I'm doing right now, he does not own a primary residence. He only has an investment property. So the lender is really concerned that he's not going to live in there. And then the rep said that they're just really concerned, and they have to document that there's not reverse fraud going on in these loans.
Yes, and we have, they do have to sign something within their documents that the purpose of purchasing this property is intended for a non-owner only. So they're declaring that. But I mean, we don't have an issue with it at HomeXpress as far as someone maybe renting a single family residence or whatever, or even an apartment, and them being an experienced investor already having one, they can get another.
So this is a great alternative. So like the rates, I heard the rates are really low, like 3.5%.
Are you serious?
I'm teasing. I'm leading the conversation.
Yeah.
Okay, so
rates are anywhere from the mid 4s all the way to
the 6 and 7s,
high 7s.
Okay, so my borrower right now, and I'm actually not doing him at her company, but another company, he wanted a 30-year fix at 6 3/4, and he's paying a couple of points. And it's a lower, so it's not that bad, but he has like a 660 FICO. So this is one of those great investor products where you don't have to have a 720 FICO score like a lot of the traditional programs. How low can you go with your company?
We can go on the InvestorX, we can do like 600.